Hi, this is April with April Bay Homes, here with Jeremy.
Thank you, April. I'm Jeremy Owens, Vice President Branch Manager with First Community Mortgage, mortgage lender extraordinaire, and very happy to be here with April today as we talk about those mortgage options. And we're also going to talk about the population changes and what we're seeing in the market as the market is changing a little bit.
Yes. So first, let's talk about the zero down options. What does that do?
That's a great question, and I'm sure you hear all the time,
I
zero
do.
down means, oh, it's not going to cost me any money to buy
Right.
this house.
That's correct.
Well, zero down means 100% financing, which is no down payment, but there are other costs up front, like
The appraisal. How much is
appraisal.
that?
You're right. So appraisals run somewhere around $500, and that's typically paid up front. What
Okay.
else?
We have the earnest money.
That's right, earnest money.
That's usually 1% of the purchase price, which you have to have if you're going to go under contract.
That's right.
What are some other things?
You know, I think a lot of people like to have a property inspection, right? How much do property
Yes,
inspections run?
you have to. In today's market, you must have a property inspection because it's very important to make sure you actually want to purchase that property and move in with no extra expenses unexpected extra expenses. That's very important.
That
I
is.
think that
Absolutely.
is a little
Yeah.
scary.
It is. Now, a lot of people confuse property inspections with appraisals. Why do you think that is?
I think they do that because they don't understand that the appraisal deals with the lending side of things and the inspection actually deals closely with the real estate agent and themselves.
Yeah.
So they must kind of focus on if they want to move forward when getting that inspection
Yeah.
and seeing all of the issues that come with the property and and most of all the termite inspection as well.
Absolutely.
I think that's very important
Yeah.
too.
And a lot of people ask me when they're getting the appraisal, well, if I'm getting an appraisal, do I need a property inspection? And I echo the same sentiment.
Yeah.
An appraiser only goes through her guidelines and checks off a few boxes to make sure that certain things like safety, marketability, habitability, those sort of things are checked. Versus a property inspection is much more thorough.
Yes, very thorough. I work with a lot of property inspectors that they really don't when a buyer goes in, they really don't expect them to be thorough like that. So
Yes.
when they see this report, this 100-page or 50-page report, they're kind of surprised, but at the same time, they like that because they're getting all the details down to the smallest thing
Yeah.
that may need to be repaired.
That's right. So is it worth? How much does it
definitely.
cost?
Between 300 and, depending on what you're getting, 650. I did have one buyer that wanted to get like a scope down to make sure the sewer
Wow.
was
Yeah.
working properly.
Yeah.
So those
absolutely.
things are very important.
So if you don't need a down payment, and maybe you say, hey, I don't have a bunch of money to put down, do you still want to spend that money?
I think it's very important to spend that money because I wouldn't want my clients to walk in
Yeah.
into a property, move in, and you have all these things that you need to repair.
Absolutely.
I want you to know beforehand
Yeah.
what it is that needs to be repaired.
That's excellent. Excellent advice. So we have a zero down payment required, but we've said we do have a property inspection that costs somewhere $300 to $600. You have an appraisal, that expense is up front, and you also have your earnest money up front.
Correct.
What other costs are involved?
I would say consider what your moving expenses are. Make
That's great.
sure that you're ready in the next, usually a contract is 30 to 45 days. So make sure you're ready to go in with all those moving expenses. You have to get a truck, you have to schedule it all, you have to change over utilities. Those things are very, they can be expensive, especially when you're relocating from one area to the next.
Yeah, that's really important.
Yeah.
There are also things called closing costs and prepaid items. Those are going to be things like finance fees. The appraisal is part of those closing costs, but then you also have attorney's fees in an attorney state like Georgia. Some states are not attorney states, but very similar, title fees. And then you're going to have things like property taxes and home insurance that are potentially due upfront at closing as well.
Yeah.
So 100% financing is fabulous. It doesn't necessarily mean, though, no money out of pocket.
Right. That's important. Please, no money out of pocket doesn't mean you are not coming with those upfront costs. What are some other options that they have with financing?
Yeah, absolutely. So, specific loan types that might be available for 100% financing would be things like a VA loan that is a fantastic benefit for our veterans. I always encourage our veterans to take advantage of those benefits. They've served us, let us serve you.
Definitely.
We also have USDA, which is 100% financing. You might often think of USDA being like food, right? The food management and quality, but USDA also has a 100% financing mortgage that's designed to help bring the population out into more rural areas.
So how exactly does the USDA work? Because I've heard different things about the USDA, but just kind of centralize what the main things are with a USDA loan.
Yeah, great question. So USDA financing, again, is designed to help encourage population to move out into more rural areas. There are certain parts of every state that are designated USDA rural eligibility. Okay. So that property would have to be within those areas.
Okay.
It's actually pretty easy to do a quick property lookup, as I know you use that tool all the time.
Oh, yes.
And there are also income maxes. Mm-hmm. So families of up to 4 and then 4 to 8, there are certain incomes that family have to earn below in order to be eligible for that financing.
Okay, so what are some of the pros in using a USDA?
Yeah. So USDA financing allows no down payment. Okay. So definitely, even though there are going to be other costs involved, closing costs, soft costs like we talked about, you will be able to retain more money in your pocket after closing.
Okay.
So it's definitely easier to get at. Also, they're going to be lower mortgage insurance premiums. So it keeps that monthly payment a little more manageable.
Okay.
Some people consider moving out into rural areas, and we've seen a big population shift as more and more people begin to move out. Mm-hmm. There might be some cons. What are some of the things that you've heard that sound negative to people?
I would say the one thing, the biggest thing, is having Wi-Fi. Having that option to have better Wi-Fi, which again, because you're moving out into a rural area, more people are doing that, so you have more people, more service areas going out to those areas to provide that service. Yeah. So I think it's important to just check and make sure what options are out there.
Yes.
To make sure that you're okay with that Wi-Fi.
Absolutely. And I've seen a lot of people over the last couple of years with the pandemic, really being able to work remote. And I think that's driven a big shift into different markets like rural Georgia.
Oh, yes. And
there are a lot of government programs and incentives involved in pushing broadband out into more rural areas.
Okay, that's important. Knowing what those options are, knowing your options. Now, can they come to you and you kind of know everything that you're able to, I guess, offer them in doing that USDA and having those options?
Absolutely, yep. So we can have a great conversation in reviewing, if the property is in an eligible area, and confirming that they meet the guidelines and criteria to qualify for a USDA mortgage.
Okay. What are some other options that they have besides the USDA? We talked about VA.
Yep.
Do you have any creative loans? that you could offer?
So that's a fantastic question. I think I heard a stat recently, something along the lines of 30% of employees now are self-employed. Of
Yes.
workers are self-employed.
Definitely. Sure.
I've heard the term the gig economy. So a lot of opportunities exist for people that might not earn a traditional W-2
Right.
hourly wage or salary wage, but fantastic job opportunities, fantastic ways to earn a great income and to build wealth. I heard a stat recently that somewhere along the lines of 30% of the workforce are self-employed, and even potentially more have another side job or maybe a gig. I've heard the term gig economy, that are earning wages via 1099, and those are not W-2 wages.
Oh, wow.
So there's some new creative financing and mortgages that are designed specifically for those type of buyers.
Okay. And that's very important because we are going towards that generation where they are working more from home. We have mothers. So what are some of the creative things that you can do
Yeah,
when looking at those workers and home?
absolutely.
home?
So the technical term for these type of financing options are non-QM, so non-qualified mortgages.
Okay.
The government passed in the Frank-Dodd Act after the last crash, the financial crash in 2008, rules to really safeguard both home buyers, people obtaining mortgages, and to safeguard the population as a whole, to keep the financial system in balance. Anything that's outside of those basic conventional and FHA government guidelines would fall into non-QM. That's a fancy word for private investors that have put together mortgage options that are going to be more flexible. So things like maybe a 24-month bank statement loan.
Okay.
So
24 months.
yeah, 24 month. There's also 12-month bank statement loans.
Okay.
And even 3-month bank statement loans.
Really?
Absolutely.
3 months.
3 months. Well,
okay, so what does that look like? Let's
Yeah.
just talk about that.
that's a great one. So the investor, the mortgage company, will review those bank statements and determine the total income that would be available to help pay the mortgage and pay other debts outstanding.
Okay. Okay.
Now, these are not mortgages that would be considered risky,
Okay. Okay.
like maybe back before 2008,
Right. Okay.
because these require substantial down payments.
Okay. Okay. So when we say
Typically
substantial,
20%.
20%. Okay.
Yeah, typically 20%, sometimes more. And
Depending on the income.
depending on the income type, the program type,
Okay.
so the different flexibility options. And they also have credit score tiers.
Okay.
Yep.
So you want to make sure that you have your credit together, you guys, before going into any type of financing, because that's very important in where you stand and how well the process moves through.
Absolutely.
I'm sure you guys have programs for credit repair or credit, just kind of helping them know
Yeah.
what they need to do
Yeah.
to get to that point as well.
Yeah, that's great. We do. So we would not offer credit repair directly, but we have some great partners and people that we can refer out to help with those with credit repair and credit tips, including HUD-approved counselors. We like to make sure that when we make any sort of introduction, it is to an approved agency.
Okay.
We've heard a lot of horror stories of people that get taken advantage of. So we want to make sure that we're always passing to
Okay.
an approved counseling agency.
Now let's talk about. No one wants to talk about this. Taxes.
Taxes.
What is required to make sure you come up front and you have everything ready to go?
Yeah. Great question. So typically, 2 years tax returns are required for self-employed buyers and other buyers that might need tax returns to verify certain incomes.
Okay.
Dividends, interest, maybe rental income, things like that.
Okay.
So if you have the opportunity to earn those types of incomes, I would highly recommend that you have your tax returns filed and prepared in advance of applying for a mortgage.
Now, you say 2 years are required. Is it anything, now do they have to have the years before that done? Or can they just have those last 2 years done?
Yeah, so that's a fantastic question. And from a mortgage underwriting standpoint, we typically want to review the most recent 2 years tax returns.
Okay, so the previous years, and me being on the tax side, you still, before you even do those years that are needed, you still have to do those previous years. So you can't skip any of the years.
Yeah. I think the IRS would definitely appreciate that you would file those previous returns.
Right.
One thing I will tell you about unfiled previous year's returns is if you owe, you still have to pay those taxes.
Right.
And we do see from time to time tax repayment plans, and unfortunately, some people have tax liens, and those need to be handled.
Okay, so you do have a tax repayment plan that they can still qualify.
Yes, if they have a tax repayment plan in place, then we're able to review that to confirm that it follows the guidelines.
Okay, so it can be a certain amount you're paying each month. That's within your income. Mm-hmm. Okay.
Yeah.
Okay.
Yeah, as long as it meets the standard guidelines, and each program has guidelines on how we're required to review those and include them in monthly debt obligations.
Okay. Okay. Debt to income ratio.
Absolutely. Debt to income ratio. The famous debt to income ratio.
Okay. Last thing we want to talk about is the growing population in Georgia.
Yes.
And how is that shifting with the mortgage side of things, the lending?
Yeah, absolutely. So I saw a stat recently, and the stat was approximately 1 million population growth in the last 10 years.
I can see that.
Yeah, that's a lot. That's a big population change.
I can really see that. And I think more people are going, they were in the city at one point, but then they're going to go outward, further out to, I guess, get more bang for their money, get away from the crime, and the population itself.
Yeah.
Where do you see any, I would say, where they're coming from?
Yeah. That's, the last 2 years with the pandemic and the rise of remote work, we've seen a substantial number of buyers moving in from places like California, Colorado, Texas, New York, New Jersey, even Florida.
Oh, wow.
People coming up into the Georgia area. A lot of people in metro Atlanta, and then a lot of people moving up into rural areas like you referenced.
Okay. Great. Oh, wow. So we are looking upward for this market, even though the stats say certain things, we still have a growth rate, which is going to shift.
Yes.
It's just going to shift for us.
Yes.
Okay.
Yeah, the headlines, I've seen some very interesting headlines, and I feel like the headlines are a reason to click an article and read.
Right.
And that's a great way to generate advertising revenue for the media.
That's true.
But the headline might not necessarily give you the full story.
Right.
I think one of the most interesting headlines that I read recently was housing prices collapse.
Right.
I clicked the story. I was very interested.
Really? So what did you find in that? Like, what stood out to you in that article?
Yeah, so I got into the article and I thought to myself, wow, housing prices collapse. Why am I not seeing this in my day-to-day job? And what I read in the article was the second or third line said housing prices appreciation or house price increases have fallen the largest on record. Well, let me tell you, that meant the house price increase went from 19% year over year to 17% year over year.
Wow.
House price increase declined by 2%. Not house prices, but the house price increase.
Right.
But when I read the article headline, I thought, oh my gosh, housing prices collapsed. This is awful. Digging in to the meat of the article and what's really happening in the market is that the price increases are slowing down.
Correct. Yeah.
Which is a good thing.
It is a good thing because I think a lot of people, it was hard for them to qualify for some of those, and they the prices kind of like drove up really fast.
Yes.
I did see that.
Yeah.
And now you have prices that are decreasing to where you have more qualified buyers for it.
That's right. Absolutely.
And I think that's important to know, like, the prices were at an all-time high, which caused a lot of buyers to kind of step back and review, you know, are we ready for this? Are we ready to buy? Plus, the cost of everything that comes with it.
That's it. Yeah.
So it's very important for them to do the research, but also to talk to a lender about their options and to talk to a real estate about what market you want to be.
Yes.
Okay.
So, a great question, a great follow-up question. Should someone start looking and just go out and approach a house on their own without a realtor representation?
No, I don't think they should, because they don't know what they're getting themselves into.
Yeah.
And you also want to be represented by an agent who will protect you.
Yeah.
Who wants to protect you in this market.
Yeah.
You do have seller agents who are protecting their client.
Yeah.
So you want to have a buyer's agent and you want to have a seller's agent to protect you.
Yeah.
That's very important.
I highly agree. It seems like the hardest transactions are ones that don't have representation.
Is
Where
it?
one of
You
the
find
parties.
that okay.
Yeah. It's a team. It's teamwork.
Right.
Teamwork.
Because you're literally working with that buyer directly, and they're asking you questions about something the real estate agent should be
Absolutely.
doing. Okay.
Yep. And when either the seller or the buyer are unrepresented, I can't answer those questions.
Right.
Those are not legal questions that I can answer.
So you stick to the lending side of things. You can
Yes.
answer all the financing questions, which I do leave it up to the lenders to do that. And then all the buyers' questions for the real estate agent needs to be answered with the real estate.
Yes,
Okay.
absolutely.
Okay,
Absolutely.
that's very important.